Morning, everybody. Thank you for making it out on a brilliant Thursday morning as the sun shines on us, hopefully, but the snow has definitely fallen, so some good skiing for you. It has been such a meaningful couple of days at Davos, and I think for all of the attendees in this beautiful village of Davos, not only have the conversations been robust, it has also been about making new friendships, inspiring each other with the work that we are doing, and how we can collaborate in a fragmented world. Certainly that is the theme at the World Economic Forum this year. And in our current environment, that is more important than ever. Welcome to this event. I'm Angie Lau. I'm editor-in-chief of Forecast News, and we are thrilled to be helping launch the Universal Digital Payments Network today. It is a very illustrious event in that it is one step closer to the kind of technology that will truly be the future rails of a digital economy that we're already experiencing now. The architects are here. The folks who have been playing in the sandbox, if you will, but doing some very due diligence and work in the bank space. And the collaboration that we've seen really is a testament to the theme of World Economic Forum in Davos for 2023. We also welcome all of you joining from around the world. So our room here in Davos has a live audience, but I also welcome so many more of you from around the world dialing in. There is, for those of you joining online, a Q&A box, and we welcome you to contribute your questions. Today is really about learning about not only how modern finance is evolving, but what are the support rails that we are seeing for CBDCs. The need to transact and trade is truly one of the oldest themes, and as old as mankind itself. The way that we want to relate to each other is one way. The way that we want to transact value is the evolution of what we are today. And in a global economy, the speed in which we expect this to happen certainly has not necessarily been matched by the technology until potentially right now, this moment, with the kind of technology that we have around the world. I wanted to share with you a little bit from what I learned at World Economic Forum yesterday. I got to sit in a panel at Congress with central bank governors who were discussing the importance and the challenges of importing the technology and utilizing it for CBDCs. And one of the biggest challenges that surfaced was really not only the integration, but the interoperability. After all, it is about cross-border finance, and it is about cross-border transactions. And so how do we do this at a speed in which the trust is there, the collaboration is there, and that interoperability must be the key if we are to migrate from the old world to the new without locking the liquidity in the old world if there is not trust in the technology. And it was truly incredible to see the innovations that the central bank governors that are involved with the CBD projects from around the globe, discussing it with such candor and candidness that really excites me today as a journalist who has been covering this space for, dare I say, half a decade now. It is a story that is the greatest story of our age, more so than what we are experiencing either in economy or in geopolitics or even in foreign affairs, because this is a technology that transcends it all and can also redefine the kind of relationships that we have with each other. So let's find out more from both the architects and the banks from around the world who have been working on the Universal Digital Payments Network. It's an exciting moment for DLT technology. and indeed for global finance. And so right now, without further ado, I would like to introduce to you to the stage Dr. Florian Becker of Global IT Engineering and Solutions Provider, GFT, to get us started. Florian.
Thank you, Angie, for that really warm welcome in freezing Davos. It's beautiful. It's a lot of snow. I just had a chat with one of my friends here in the audience, and he realized, hey, you just flew in from Singapore. That's about a 40 degrees Celsius drop. Yes, indeed, it is. So a really warm welcome to our supporters, our contributors here in the room, and also equally in the video stream. It's a big day for us, and I would like to start with a question to the audience, but also to the video stream. So, talking about Singapore, where I live, there you see a $1 Singapore dollar banknote. So, question to the audience: have you ever seen that banknote before? It looks quite old. I appreciate that. So I see no hands here. I have to say, Singapore is pretty much a cashless society at this point. But I would have recognized that, and I didn't know it either. So what is this? If we pay a little bit attention to the details here on the frame, you see state of Michigan. So that should make us a bit suspicious. So what is this? It's actually a banknote that's been issued in 1838, right? Quite a long time ago, by the Bank of Singapore in Michigan, US. So there is a small town in the US called Singapore, and they had a bank issuing a private currency back then. That was the age of basically free banking. And the story behind that bank and that banknote is they issued about 50,000 Singapore dollar in that sense. As private currency back in the day. But inspectors found out that the Bank of Singapore in Michigan didn't have enough reserves to back that up. So they dissolved the bank, and all the savings, basically, on all the value of the currency got lost. So an example of under-collateralized currency, a private currency, and this is known as a phenomenon that not only happened with that Bank of Singapore, but also with other banks engaging in that fraudulent practice during that time, and it's called the wildcat banking. I find this a quite nice term. So this wildcat banking basically led to the point where in 1863 the federal government of the US stepped in, took control with the National Banking Act, and regulated the issuance of national currencies backed by Federal Reserve debt. So that was basically an end to an era of private currencies. If we go to a more recent example, so from 1863 to 2022, last year, well, you may start thinking that history does repeat itself. So look at a modern example of the wildcat banking, if I can use that term, the Terra USD, where USD was an algorithmic stablecoin issued by the Luna Foundation with a market capitalization at one point of 18.7 billion at the peak. And well, the foundation was mandated to ensure the value pretty much at $1, obviously, because it's issued as a stablecoin. Unfortunately, when the market found out that the foundation did not hold sufficient assets to support this token price, the value dropped significantly and lost basically all the value down from $1 to 2 cents. I think this story is known in the marketplace, but this story is also sent shock waves across not only the crypto industry, but also alerted regulators very much. I think we can state that. So in the context of this modern version of maybe wildcat banking, the IMF describes a new era of money where central banks are concerned about the implications of, well, both the financial and the economic stability if decentralized payment systems, so offshoots of Bitcoin or so, or private stable coins are to displace the cash and traditional payment systems that are managed by regulated financial institutions. So regulators are concerned in a nutshell. And a payment infrastructure that's entirely in the hand of the private sector might be efficient and cheap, but it might also cause issues when, well, because it could freeze up in the event of a loss of confidence during the period of a financial crisis. So without a functioning payment system in a modern economy, the economy basically collapses. So yeah, central banks respond, take control, want to take control over that phenomenon, and are contemplating to issue digital forms of central bank money for retail payments. This is also echoed by a written piece from Forecast News commenting on a World Economic Forum blog post on CBDCs, which is emphasizing the benefits of the CBDCs. There are basically three main benefits. So the World Economic Forum says it's reducing poverty, tackling economic crime, and also strengthening the financial system. So I think it's at this point, we can say that CBDCs are becoming a reality and they are here to stay. When we look at the activities of central banks around the world, the BIS says about 90% of central banks are engaged in building a digital currency. There is the central bank digital currency tracker. I like that. It's pretty much on a daily basis updated. They even say it's 114, which is basically 95% of all central banks. So pretty much the whole world is engaged in that already. There are prominent examples. I will take two from APAC. One is obviously from MAS that was issued this year on the FinTech week, where programmable money and basically the connection to a purpose of the money was put in front. And the other one is the one in Hong Kong. Apologies, I need to scroll down a little bit, where Hong Kong MA developed a CBDC-backed stablecoin prototype to explore new digital payment use cases. So in a nutshell, we see a lot of activities across the globe. And well, you could argue this is still a little bit of the future. But when we go to I would say, key characteristics of the digital money, we can state it actually improves and eases the speed of transactions. It improves transparency, improves liquidity. It enhances resilience, and obviously it increases the access to money. It should foster the development of new applications to protect the end users and strengthen actually the financial systems. But again, this money is also programmable. So you could, for example, argue it can enable end customers to get their money back automatically if some benefits that were promised by a seller, by a vendor, are not delivered in time. So that would reduce the risks that an end user has, or yeah, basically a private person, and creates even more trust in the digital economy. Well, CBDCs have, I would say, a concept that is very close to CBDCs is what we would call the regulated fiat-backed stablecoins. And they are a reality already. So they are here, we can use them, and we do use them. And the concept behind it is very, very similar. Since 2017, those stablecoin issuance and adoption has increased actually exponentially. And well, the key point here is the backing with fiat fiat equivalent reserves. While these, currencies reduce cross-border frictions, they also create, a new challenge, the cross-border interoperability. The whole topic of interoperability, and you said it, is the big challenge here. So this space is evolving. This space is growing really fast. But there's a question when you have several, let's say, islands or silos developing, and for example, USDC is issued on several different blockchains. So where is the interoperability here? And maybe even more concrete, where is the infrastructure for the digital money? Where's the infrastructure for digital money? When we look at the current infrastructure, how we transact money from one country to another, I think we can say the market is really pushing for a change. Yeah, it's the cross-border transaction market is a $23.5 trillion market, and there's still relatively high transaction costs. Our current infrastructure supports cross-border payments, yes, but it takes 2 to 3 days. And I can validate that because for this venue, we sent the money and it took exactly 3 days, right? So it's not just a statistic that that I'm quoting here from that academic paper. It's a reality. It is still a reality. And the other aspect of this is, where was the money within those 3 days? We didn't have any transparency. We just knew we send it, and after 3 days, okay, it has arrived. But there's no transparency in between. That's why Oliver Wyman and JP Morgan recently reported a 100 billion saving potential, basically I would say I call it a market potential by leveraging a CBDC network that supports real-time cross-border payments. So this is I would describe that as a market pull for a different infrastructure. Finally, when we look at the technology, let's look at this at technology level. At the same time, the use of DLT and blockchain technology on an enterprise level has significantly increased and matured. So when we look at the Gartner hype cycle, for example, the stablecoin is marked as very likely to reach the productivity plateau in less than 2 years. So definitely there is a big opportunity to build the infrastructure in a broader adoption context. And so we also agree with Daniela, who's here in the audience and is one of our valued panelists later on from Hyperledger, that of course blockchain production readiness depends on industry, and of course depends on the use cases. Indeed, we see a really increasing interest in the use cases of blockchain technology in reducing transaction cost in the financial world. So let me summarize all of that together. We have a regulatory push from the central banks across the globe. We have a market pull for infrastructure, a market demand, a window of opportunity. We have stablecoins as the bridge technology. We call that the bridge technology to CBDCs. And we have business readiness of DLT technologies, all at the same time, which is a massive opportunity to build the infrastructure of tomorrow, now, and to enter into the new era of digital payments. Well, accordingly, we are convinced that the timing could not be better. The time, I believe also the place, is very perfect for today's announcement. After 18 months, more than 18 months of work, we are very, very proud to announce the launch of the Universal Digital Payment Network, UDPN, today, an infrastructure to foster collaboration in a fragmented world. Let me give you a view of what the vision is. So the vision is a global payments messaging network for digital currencies. The UDPN is a payment messaging network for regulated digital currencies. It's DLT underpinned global payment, a backbone basically that supports regulated fiat stablecoins, fiat-backed stablecoins and CBDCs. It enables interoperability between all approved digital currency systems and protocols. And we will allow any company to transfer and swap digital currencies across borders, networks in a very low cost and convenient manner. The network itself is jointly managed and governed by the UDPN Alliance through a distributed governance framework that ensures a joint control. We also encourage innovation. We encourage third-party smart contract deployment and actually execution of value-added financial and payment-related service. So we see three differentiators of the UDPN. UDPN as an enabler for interoperability and high-efficient payments. Number one is our time to market. So unlike other initiatives, UDPN is a working infrastructure. It's based on a very detailed concept. So we have summarized all of our thoughts and all of our architectural designs in the white paper. That white paper is the result of, I would say, years of constantly sharing and getting feedback from financial institutions, from regulators, from tech companies. So it's really a co-creation, I would say, within the industry. That sandbox, that white paper basically led to a sandbox and a real live application that can be tested. So we already granted access to this sandbox to play, to understand how UDPN really works to various leading banks on a global basis. And we have a set of 10 POCs that we will execute in 2023. So UDPN is a working solution. And UDPN, second, is governed by an alliance of both financial institutions, technology companies, industry players from different geographies. So the alliance was basically kept at 24 participants, and each member is operating a validator node. I will come to that concept in a second, sharing equal voting rights. Important here, it means the ownership and the control is fully decentralized. It's a very important element of how we conceptualized UDPN. So no single member has more authority than the next, and all actions are determined through a voting mechanism. For some of the decisions, for example, bringing a new core member on board, you would need a supermajority. For other decisions, there is a smaller majority for sufficient. And last, of course, our whole architecture is decentralized, basically because each node has its own function, is run by different stakeholders. I will show the architecture in a minute, so I think it's going to be quite obvious. So some metrics: our payments are instant. They are minimum 90% cheaper than the current standard. They're transparent, and the key elements of the infrastructure are open source to support that transparency. Everybody can see what it is behind. So what is UDPN? It's actually, well, at the core of it is driving efficiency and transparency. The solution is the infrastructure based on a decentralized permission network, solving the challenge of interoperability. It does not directly serve the end users. It rather grants access to IT systems that create UDPN DIDs, link and unlink wallets, and initiate digital currency transfers and swaps throughout the network. UDPN will only support CBDCs and regulated backed stablecoins, no unregulated speculative cryptocurrencies. The UDPN addresses the interoperability by creating a global payments network designed for digital currencies across any technical platform. And the DIDs are basically linking those accounts and wallets on CBDC and stablecoin systems. So digital currency can be easily transferred and swapped, and all transactions will occur within each CBDC and stablecoin system, right? So basically, UDPN lends a critical universal messaging and interoperability functionality to the CBDC and stablecoin ecosystem. We lend that functionality. Yeah. So the architecture is not very technical. This is we can describe that basically the easiest way to describe UDPN is it's a bridge that consists of three parts. One part on the left is the business node, on the right is the transaction nodes, and in the middle is basically the validator nodes and the actual blockchain. So let's start with the business nodes. On the one side, the business nodes is the gateway to IT business systems. So any business system, enterprise system that interfaces with end users. So the business nodes are connecting to the UDPN and this is achieved basically by installing the business nodes locally that can then basically get access to the network and connect those users through our middle layer here to the CBDC and stablecoin currency system on the other side. On the other side, the transaction nodes, that's basically the gateway to many digital currency, to as many digital currency systems as possible. So for each digital currency, one transaction node is customized, and that is how we onboard on a currency system where digital currency is actually issued and managed. So in the currency system, that's where the currency is issued and also managed by the regulators. So only commercial banks will run transaction nodes, and they will also provide the liquidity pools for the swaps. And in the middle sits the permission blockchain, yeah, to enable the decentralized governance through validator nodes. And basically the bottom layer is the core infrastructure, which is built and actually maintained by the alliance members. While on the top layer, you have two different types of applications, or we call it also the smart contracts layer. It is on the one side, it is actually really the passing of the messages, right? But there is more to it. We have what we would call a programming capability. So that means business processes can be calculated with those messages and can actually trigger the execution of different business scenarios. So the programmable part is important because within the upcoming POCs, we encourage third parties, part of the network, to develop those smart contracts, to develop that logic, for example, FX, within that we can call it even a marketplace, right? Some of the services or smart contracts on the application layer will sit within the official UDPN services, the transfer, the swap, the DID, that's already in place. Others will be built, and the 10 POCs will support that journey within this year. So that gives you an overview. The regulators and the auditors will have access to that network, a read-only access to a specific node. It's read-only, they cannot write, they can only see what's happening there. And then let me come to the, well, it's a live network. So we would like you to work with us today. And it's a network, and we welcome new UDPN participants on an ongoing basis. To make that onboarding as easy as possible, we have implemented an easy 3-step approach. So first, we suggest read the white paper, make yourself familiar with the context, get a demo session. We can show you how a transaction works, and then for selected enterprises and institutions, get actually access to the sandbox. And with the sandbox, get familiar with the UDPN functionalities via the web interface or via the download of the business node, and install that to get familiar with it Tim will talk a little bit later about what we can do with it. And the second step would then be part of the POCs. And that's really important because those POCs are not something that we just came up with. That's the result of a lot of discussions with the industry. We have 10 POCs defined that we think are most relevant for now, but this is not the end. That's just the beginning. So we embrace more proof of concepts to develop this network further. And final step would then become a part of the alliance, the UDPN alliance, as an equal member to get involved into the network's governance and run a validator node and basically participate in the roadmap, in the build, and in the business development of UDPN. So our website is live now. So I would like to invite you to have a look. You can find our white paper there. You can apply there for our sandbox. And of course, we would like to encourage everyone to join a proof of concept. I would like to ask our partner, Tim Bailey, Head of International Business for Red Date, on stage. Hand over to you and give us some insights how we make this real.
Thanks, Florian. Thanks. Good morning. Great to be here. As Angie and Florian said, it's a beautiful day here in Davos. I want to talk a little bit more about how we want to engage with the industry. So as Florian says, we've had a sandbox for UDPN live, actually since July of last year. And we encourage people who are interested in testing out the technology to contact us to apply for an account, and we can walk you through it and take you through how it works. We want to do that because we want to make people in the industry familiar with the UDPN architecture, and not just a white paper, not just a theory, but how it actually works, how the technology works. We also want to give people the opportunity to test some of the basic features and services that are built into UDPN. And lastly, what I'll talk about in the next set of slides is, as Florian said, we designed 10 proof of concept use cases based on feedback that we got from financial institutions, technology companies, central banks, and other government agencies. And so the sandbox will really be the place where we'll start testing those. So again, please contact us via the links or the emails that I show on the screen to get access to the sandbox. So as I said, we designed 10 proof of concepts. And what we're really doing here is testing future business scenarios based on input that we've gotten from the industry. We will have 10 that we will complete by the end of June of this year, and eventually have 20 in total. And what these are designed to do is really to enable people to experience what's possible with e-money and demonstrate how digital currencies and the related ecosystems will function. The use cases that I'll describe here build from the most simple to more complex, each of them building on the capabilities demonstrated from previous use cases. So that's the logic of these cases. I would note that in all of these use cases, organizations must comply with the local regulations regarding tax, digital currencies, and customer KYC requirements specific to their operating jurisdiction. So the first POC, very basic, is a digital currency transfer and swap. So what this use case demonstrates is how a bank can link its customers' bank accounts with their stablecoin wallets. And through the bank's end user interface, customers can initialize any linked stablecoin transfer to another customer of the same bank, either via bank accounts or another wallet address of the same stablecoin outside the bank. So this swap can be performed between two linked stablecoins, between two different bank customers, or between one bank customer and a wallet address outside the bank. So that's the first POC of the most basic. The second is implementing the travel rule. So the travel rule requires that for two financial institutions involved in a digital currency transaction, they have obligations to obtain, hold, and transmit required originator and beneficiary information in order to identify and report suspicious transactions, monitor availability of information, and potentially take freezing actions. So what this use case demonstrates is how two banks can exchange originator and beneficiary information during a linked anonymous stablecoin transaction or swap. So the travel rule data exchange is fully encrypted and linked with the UDPN transfer or swap transaction. That's number two. The third will be a bank issued stablecoin use case. So in this use case, we will show how a bank can issue a stablecoin on the UDPN network, and the stablecoin can only be used exclusively by the bank's own customers through the bank's internal system and UDPN business node, or permission can be granted to allow other business nodes owners to access it on the UDPN network. That's number three. The fourth is to purchase digital currencies with fiat money. So this will demonstrate how a money service provider can convert fiat money via a bank transfer, credit card, or even cash to regulated stablecoins or future CBDCs. The service provider's customers can directly open digital currency wallets and receive the converted digital currency amount directly from the service provider's wallet without passing through any third party. Number five, we'll demonstrate how a digital currency payment gateway can work for e-commerce. So what we'll show is how an online business can use UDPN integrated digital currencies as one of the payment methods on their website or mobile app by simply installing a UDPN business node locally and accessing the related APIs. So the business owner can select and then activate any digital currency from a list of those supported by the UDPN. The payment will be moved from its customers' digital currency wallets directly to the business owner's wallets without going through any payment service providers. Number six, we will demonstrate how we can, through UDPN, enable gasless transactions using public chain-based stablecoins. So what this use case demonstrates is how a business can allow its customers to make payments in public chain-based regulated stablecoins using the UDPN infrastructure without holding and using the public chain's native cryptocurrencies. The basic process will be that the business pays for the gas costs with its own cryptocurrency wallets, adds the cost into its customers' total payments in stablecoins, then processes the payments. Number seven, we'll demonstrate cross-institution KYC verification. So this will show how two businesses, two banks, or governments can verify each other's KYC-based customers' identities, leveraging the UDPN infrastructure and its DID architecture. So as an example, if a bank's KYC verified customer goes to a government agency for some form of approval on a matter, and the bank is an authorized KYC issuer of the agency, the customer only needs to give the agency signed permission with his or her DID's private key. The agency can then verify the customer's bank identity certificate with the bank's signature. This use case can be widely adopted in any cross-institution KYC verification scenarios and is an important demonstration of how decentralized technologies can make traditional IT processes much more efficient. Number eight, we'll demonstrate a digital asset tokenization. So how an asset can be tokenized on the UDPN network through a set of tokenization smart contracts handling insurance, underwriting, compliance, trading, settlement, and recovery of the full circle of the tokenization process. Number nine is around foreign exchange. So a foreign exchange mechanism will be built to better facilitate swap transactions performed by the UDPN as the number of regulated stablecoins and CBDCs grows. So what this use case demonstrates is how foreign exchange rate matching will be managed and facilitated through a series of smart contracts deployed on the UDPN's core blockchain network. And last, number 10, the most complex of these is a central bank digital currency issuing and circulation. So in this case, we'll show how two commercial banks using UDPN infrastructure can manage, issue, and create a token-based central bank digital currency as an issuing banks for all three of the CBDC operating models: direct, indirect, and hybrid under a central bank. So these are the POCs that we, along with a number of members of the industry, will execute on over the next 6 months. GFT has a dedicated team to manage each of these POCs, and we will publish reports with the key learnings of these POCs after the completion of each one. And each POC will then live and stay in the UDPN sandbox later on for other partners or interested parties to learn about and experience. So of the 10 POCs, we have roughly half of them subscribed today and are looking for partners to join others. So we invite interested financial institutions, businesses, and government agencies to participate in these use cases. And we believe that the learnings and outcomes these will play a critical role in defining technology standards and setting future financial industry norms and rules. So thank you for the opportunity to talk about the 10 POCs. With that, I would like to invite Angie Lau back up to the stage to help moderate our panel discussion. Angie.
Thank you so much. All right, shall we get some chairs up onto the stage? Thank you so much for that. It was certainly, with the advance of this technology, there needs to be a sandbox, and we've seen that with regulatory environments in jurisdictions, and we've certainly seen that in the private sector. And it's also what I heard at Congress, at World Economic Forum, when it comes to the interchange of experiences and learnings that we can all really partake and grow from. So I'd like to welcome back Tim, and I would also like to welcome David Cryer, and if we could welcome Daniela Barbosa of Hyperledger. Let's see, let's get 4 on the stage, and I will sit here. I will sit here. David and Tim. Fantastic. Excellent. Okay, good. And of course, as we said, this is a hybrid event. It is what we have gotten used to during the COVID years. We have expanded our learnings over the past few years as organizations and decentralized teams to participate. Now we can do it here in real life, and certainly welcoming our panelists joining from around the world online. We have quite a few participants joining from around the world, but I would like to introduce our panelists who are joining from banks, who will join in live as well. And they are Torsten Newman from Standard Chartered, Chief Technology Officer at SC Ventures. Wave hello. Hi, Torsten. Good to see you. I missed that skyline there. Stephen Siu-Yan Leung from the Bank of East Asia. He's head of information technology and fintech development. Great to see you. 恭喜发财.
恭喜发财.
新年快乐. And we have, or Happy Lunar New Year, everyone. It's the year of the bunny. Right down the rabbit hole we go. We have also Dr. Stefan Theis from Deutsche Bank. He is director and head of DLT and digital asset services. Also joining us is Vincent Lau, HSBC, Asia Head of International Payments. Hello to you. And of course, Daniela Barbosa, Hyperledger Linux Foundation General Manager, Blockchain and Identity and Hyperledger Executive Director. We have Tim Daly, from Red Date Technologies, Head of International Business, and David Creer, UDPN Builder from GFT Global Digital Assets and CBDC Lead. All right, to our friends joining online, we give you the stage right now and ask you to help us kick things off. And to all the bankers who are joining us with your experience learning from the sandbox and really experiencing the proof of case concepts, do you believe digital currency, especially CBDC, will become mainstream retail money in the future? So I'm going to start with Stephen Leung. What do you think of that? Good morning.
Hi, everyone. Well, I would say yes and no. So I think digital currency is certainly a hot topic, and many countries, including China, are developing their own form of digital currency. But however, we need to be prudent and further investigate the implications, especially those in terms of jurisdiction and also regulation. So more in-depth studies are needed, I think, before we can make the best use of this new form of money. You would say the current system that we are using has been around hundreds of years. And so even though there are benefits of using digital currency over physical money, and there's growing demand for it, and it will take time to penetrate the market and for people to adopt it fully. But that said, I think the bank industry is excited about adding value the technology can bring in, including the automation, efficiency, and transparency. And these are functions that we are looking forward to explore.
Thank you so much, Stephen. Stefan, I want you to jump in here. Stefan Theis of Deutsche Bank. I heard at Congress yesterday from Euroclear colleagues and also central bank governors about also the application of CBDCs for the future. In your view, where do you think we're going to be in a few short years?
The question briefly, I personally think the digital currencies will play a role in the future. CBDCs, especially in the retail sector, to be seen. It depends on the evolutions, and I would say reasons being with the worldwide push towards digitization, tokenized economies, and so on. Digitized money is just one crucial element. It is just consequential that digital currencies would evolve. Also, given the current discussions, I would assume digital money will underlie some regulation. It will be regulated. However, there are quite a few digital currency types under development, be it stablecoins, be it CBDCs, be it regulated liability, bank tokens, tokenized commercial money, and so on. So one needs to see how this plays out. And also, I guess, as Stephen already alluded to, also don't forget the traditional payments. They might be sufficient for quite a few use cases. So, and what exactly retail CBDC, what role it will play in this whole mix is to be seen, and it will be use case dependent, I think. Me as a user of a retail CBDC, I would always ask myself, why would I use this or this type of digital money? And it depends on me, my user adoption, if I want to use it. And this has then various reasons behind it, and we can discuss that maybe in the second round.
Thank you so much, Stefan. Torsten, I want you to join in here as well. Very familiar with your work at SC Ventures as you build out into the future of finance, and really exciting to see some of the initiatives coming from Standard Chartered under your SC Ventures hat. As Chief Technology Officer, when you take a look at this technology, what are you building for the promise of CBDCs? What is important about building the rails today as we embrace this future?
Right. Thank you for that, Angie. And from this vantage point of Standard Chartered Ventures, I guess we already appreciate that there's visible and fundamental benefits to digital currency. Of course, to mention, stablecoins and CBDCs making settlement faster, less costly, and reducing the reconciliation effort for banks and fintechs. And that latter part on fintechs is perhaps where we're really looking at a broader ecosystem and saying there's an ability here to streamline a lot of the business processes and all the activities that are high friction and high cost. Of course, as Stefan also mentioned, there's three primary approaches to doing that today in how we realize digital currencies being tokenized fiat, generally over private networks, the issuance of stablecoins backed by reserves on public networks, and then these natively issued central bank digital currencies, which we're exploring. I don't think we have any view as to which one will become the mainstream, but we're certainly following this very closely. And I guess with each passing month, we see progress in the proof of concepts and in the live pilots of CBDCs that encourage us that this digital currency will become a reality in the near future.
Thank you so much, Torsten. Vincent, HSBC, I remember the last time it was pre-COVID, joining the line of hundreds to get those crisp, very crisp, $100 notes for the LICE, the red envelopes for Lunar New Year. So I'm sure you've been very busy. So thank you for joining us here. But when you project the future and you see the way that traditional finance really people are experiencing now in the, in the lovely way that we celebrate each other, how do you envision CBDCs in terms of how it will be utilized from a mainstream perspective, and how are you building towards that?
Yeah, thank you. Definitely, CBDC is very hot topic. We have been having active projects with over 20 central banks or regulators currently ongoing on different use cases. So retail use cases, wholesale use cases, on domestic front or cross-border front. We had just completed a cross-border wholesale project with 4 jurisdictions, the Enbridge project, having live transactions using CBDC to settle between banks. We are having successful projects also on DVP settlement using CBDC for tokenized security settlements. We are also part of, say, the ECNY projects in China for a retail domestic use case. So we are seeing a lot of central banks stepping up their efforts in the research, development, testing, validation of both the platform and use cases. And what we are also seeing is that on top of the very initial direct model for central bank issuing their own coins under their liability, more and more central bankers that I'm speaking with are moving towards the line of thinking about why not using some regulated entities like banks or regulated issuers to issue commercial bank-backed money that can act as de facto CBDC in their jurisdiction, or even in an international scene, maybe there would be a global type of issue emerging that is acceptable for multiple jurisdictions that can be used as a form of store of value. And a lot of these private issuers, including banks or other issuers, are trying to also help with the getting themselves regulated and help shape the new regulatory regime on how this may work domestically and also internationally. And a lot of the discussions also bridges into intergovernmental cooperation in the G20 or even G7 level. So definitely I'm seeing in 2023, there will be a lot of actions on this, and hopefully we are going to see a lot of new progress on how this may become real very soon.
I think that day is fast approaching, and UDPN is certainly creating some of the architecture that supports it. So I want to ask everybody in the panel here, the UDPN project has been under development for the past 2 years by GFT and Red Date Technologies and other partners, as we heard from both Tim and Florian, the 2 partners here. It is obvious to a lot of people, including our banking panelists, that this is a technology and an architecture that is ahead of its time potentially, which is why you're experimenting with it, which is why you're engaging with it. But what motivates 2 tech companies to invest heavily into UDPN? And how do you think the project can be monetized? So I'm going to start with David here. Sure. From GFT.
Thank you, Angie. When we started this 2 or 3 years ago, it was very clear that there was going to be a need for interoperability between CBDCs and between CBDCs and stable coins, and people weren't really even talking about that at that stage. It wasn't really even something that was on the table Now, when we go to these kinds of conferences, everybody's speaking about interoperability between those things. At that point in time, it was much more about stable coins or even other digital assets, but there was no real concept of needing CBDC interoperability. So that was a major motivation for us at the start. And as Florian said earlier on, we see that there's a lot of investment from central banks into CBDC development, and that is the direction of travel for finance in general, at least from let's say a technology point of view towards digital currencies in the future of some kind. So bearing that in mind, and bearing in mind that we are moving into an era of digital currencies, we felt that there was a need for a network that could provide this interoperability, and that we could create a product that was fairer for everybody, that everybody could use, to be able to interchange and swap digital currencies, and then build on top of that with extra use cases like the one there are now. And I suppose in terms of why we invested heavily, it was because we see that there is a point at which we're going to be able to get return on that because of the amount of success that the digital currency system will have in the future.
And truly an international effort. Tim, can you share with us how this partnership came to be, how you envision this technology to be utilized, and how will it be monetized?
Yeah, so it really, as David said, started 2 or 3 years ago, and I think between the two organizations, we have a shared vision that the future of money is digital, but there needs to be an infrastructure that enables the interoperability of that, and also an infrastructure that enables people from around the industry, whether it's financial institutions, governments, technology companies, to be able to contribute to that and shape it. And so I think between ourselves and GFT, we had a common mindset around that. As to monetizing it, we think that that's still, we're still in the early days of that. But we do think, again, if the future of money is really digital, the commercial opportunity for that, not only for ourselves, but for our partners and other members of the UDPN alliances, is significant.
It's collaborative efficiencies, and those efficiencies certainly mean a lot of dollars saved in whichever currency that one wishes to express. Daniela, I want to bring you in here, because when we think about Hyperledger and the work that you're doing with the community of industry, and from an enterprise perspective, how do you view this technology architecture, and what will it mean to enterprise efficiencies?
So the Hyperledger Foundation, for those who don't know, we're a nonprofit open source consortium. And since 2016, really have been developing with the community, with the private, the public sector as well, these code bases that will become critical infrastructure for a lot of these systems. Angie, you and I have been up and down the promenade all week talking, from the forum to the WEF roundtables, to different panels, to meetings about how this technology is ready for implementation. And I love seeing the use cases that UDPN is going to market with, because these are the next stage as we move forward. So when we think about why technology and why it needs to be done in the open, we're talking really about bringing together, once again, the private and the public sector, and building the infrastructure for the future of digital payments and digital currencies. When we think about how these consortiums and how these systems are being built, if you don't do it in the open and you don't do it collaboratively, it's going to be an issue long-term. So we have, for the last 6 years, really brought in technologists, financial services, the central banks themselves, for example. Since 2016 and 2017, we've had central banks like the Central Bank of England and the Boston Fed. Recently, the Banque de France joined the Hyperledger Foundation as a member. Why is it? They want a seat at the table alongside with the technology partners and and the banking financial services. So I think using open source, and hopefully today we'll talk about how the technology is ready. It's scalable. It has a healthy commercial ecosystem supporting these implementations so that you can find the right partners, for example, to do implementations, that you can find the right researchers and the people who've been gone deep into the technology and the use cases. So this week is fantastic. It's a follow-up to May. This year was a very short Davos cycle, but the amount of work that's actually happened between May and now is just incredible. And I foresee that in 2023, we will see further acceleration of these developments and see some, production use cases that are really going to make the markets change around the world.
I want to reinforce exactly what you and I are seeing, you from an industry perspective and us at Forecast News, reporting on the developments in the industry. And I can tell you that a few short years ago, it was really seen as emerging technology. There was hesitation. I would say I remember one of the Hong Kong FinTech Week events, and we were just starting up to talk about it. And there was some trepidation, but I am thoroughly impressed by the speed in which the banking industry has not only seen the efficiencies that everybody now is very familiar with, but took really definitive steps forward to engage with the technology internally and externally to the benefit of ultimately all users, the end users, be they countries, be they businesses, be they retail consumers. So I want to ask you, Stefan, from Deutsche Bank here, I often sometimes agar the traditional banking veterans and say that this is a leap into the future, and not something usually that very conservative banking industry feels comfortable with, but very impressed by even just this group to be able to embrace this kind of architecture. Stefan, when you take a look at UDPN and you engage in it, how are you experiencing it? What are the learnings that you have? And what are the takeaways that you can share with us?
Yep, I cannot talk about our internal activities, but in general, as I mentioned before, I think we are going into a multi-token world, one or the other way. So it doesn't help if you look at one token and think that's the best token. As I said, you also need adoption. And as of now, from a technology point of view, you cannot, or I cannot predict which token will win or which tokens will win. So I think a piece of infrastructure like UDPN is the first step into the new world where you have to cope with multi-tokens, multi-channels, always including the traditional ones, and have to connect to the traditional world. And you have to tackle it somehow from a pure tech infrastructure point of view to be ready for the future. And I think there UDPN is a pretty good step forward.
I'm going to bring in Torsten here because I am familiar with a lot of the activities at SC Ventures, the way that you look at startups and look at emerging technologies. So why UDPN?
Right. So really to get to the heart of that question, Angie and panelists, is that we're seeing the ability here to validate the capabilities of the UDPN, how to onboard and define counterparties and connect these institutions to each other, and really validate the supporting business processes. What that means of kind of looking at the sandbox is first and foremost relevant to our ventures, and then collectively learning with our bank peers. You mentioned the ventures where, for example, we've got a majority-owned venture, Zodiac Custody, which offers institutional crypto custody, and it seems a very natural fit to validate the on-chain digital currency transfer and swaps. We've got a subsidiary called Zai, which operates a global merchant acquiring gateway for e-commerce. And so this presents an opportunity for expanding the offering to digital currency payments. And I'm sure you'll appreciate the efficiencies gained by customers, payment gateway, and banks all transacting digitally in this payment flow. And maybe more recently, SC Ventures successfully piloted tokenized government bonds, retail government bonds. And so advancing these initiatives, right? We're looking at how do we take the lens of currency, digital currency, and allow for immediate on-chain delivery versus payments of tokenized bonds. So these are all examples of use cases where it really plays to our strengths and brings us quite a bit of learning.
Thank you so much. And Vincent, same question for you at HSBC. Why UDPN as to play in the sandbox with peers and competitors alike?
Yeah, definitely. UDPN represent a very promising approach to handling one of the key issues around digital currencies or tokens, which is interoperability. My core business is a payment business, right? So a payment business can only thrive when there are scale and there's network effect to it. And today, what we have seen from a lot of the POCs or a lot of the initiatives is that a few jurisdictions come together and agree on something proprietary, and only a few banks or the banks within those jurisdictions can work with each other. But that's not going to help me or my customers at the end of the day, right? So the reason we are all doing this is just to serve our customers, to find the best ways to move values across the globe for our customers. So we need someone to provide this interoperability layer, both from a technical, also from a operational, and eventually from a liquidity and also a regulatory perspective that are all connected, and all the jurisdictions that we operate in can be connected, and all our customers can be connected to this. So we believe something like a UDPN is one of a key layer of the ultimate solutions. It may not be the only component we need, but it represents one attempt into solving a very big piece of the puzzle. And at the same time, we are also looking at a lot of different components that would complete this jigsaw puzzle to have this global, real-time, instantaneous, final type of value transfer 24/7 with CBDC and others type of digital tokens that would be regulated in future. So definitely UDPN is very promising. We are assessing all the merits and all the use case and trying to validate our thinkings around this with our peers and our other banks that are engaged in this as well.
Thank you so much, Vincent. Stephen, what's your perspective here as you engage with the technology, first of all, to participate with peers and peer learning with new technology? What was the perspective from the Bank of East Asia, and what do you hope to see coming out of UDPN experiences?
Well, my view is there are lots of organizations and alliances around the world forming many platforms to test out the technology and also the CBDC jurisdiction, all the things, the framework, governance, whatever. So literally, we have to pick one to move on, right? So given the UDPN, quite promising in terms of the red-based technology and also from GFT, and also they have lined up a lot of promising partners, including the banks, all the partners here. So we can work on some of the use cases just demonstrated. So in short, our banks BA will work on a use case 2 on implementing the travel rule with a focus on the means of stablecoin and also the use of smart contracts. So I think BA will leverage this sandbox to better understand the technology and also the different business models and also the law and compliance requirements. But in terms of the our bank as a well-established bank in Hong Kong, I think we have a very good extensive network overseas and also in China. So I hope we can leverage all these successful use cases to enhance our cross-border business in the future. But again, as a financial institution, we really look for technology that is stable, open, and interoperable, and we are eager to conduct more trials, experiment, and also apply this appropriate.
Thank you. I want to bring in Daniela here because UDPN is a decentralized network built and based on Hyperledger BESU. This question is for you. We see more and more use cases from the financial industry, as we've heard from our friends online, using technologies not only like this, but from even broader afield, from Hyperledger, like BESU and Fabric, than public chain technologies. Okay, so this is for everybody in the industry. It's the public versus private chains, and it's one of those questions that I think are always asked. But I got to ask it: do you see a trend? Where do you see this merging, and what do you think the future is from this perspective as enterprises look to engage with this technology?
Sure. The conversation maybe 4 years ago was this versus that. Now is what is the right tool for the right network and the right infrastructure that you need. So I think one of the questions, we very often get at Hyperledger Foundation, we've been at this since 2016. We now have 15 different projects, including Hyperledger Besu, which was contributed in 2019, that really starts opening up this continuum of options for distributed ledger technology between a purely private permission network and a permissionless network as well. And if you look at how Hyperledger projects have matured, it really is how the market has matured as well. There have also been many conversations about interoperability. This is so important for us to get right and have these conversations around both public and private networks, and the discussions around hybrid networks and what tools actually allow for hybrid networks to be successful, but also to be able to be secure, to be able to meet regulatory requirements that governments will put into place. So when we think about distributed ledger technologies and the tools and the different libraries that are going to support these big systems, it's really the optionality. And what we're seeing more and more is that, especially in financial services, the banks do want an optionality of solutions that they pick at. Hyperledger Besu since 2019 has been one of the tool bases, the distributed ledger frameworks that financial services have been looking and building prototypes, that have been building solutions like UDPN on, because it does have that optionality as well. So one of the things that's really fantastic for us as an open source community, and we have hundreds of projects across the Linux Foundation, Hyperledger is one of them, that really address in basic industry needs. What I love seeing is when the bankers and the engineers at the banks show up with that they understand the code, that they want to contribute the code, they want to see it at the table of also having the influence of where these code projects are going to go. And as Dr. Becker said before, this is open source code. Anyone can look at the code, anyone can create obviously systems off of it, but also have influences. And when you have multi-industry inputs into code bases like Hyperledger Besu is seeing today, you're going to have the right code base for building these very important infrastructures in financial services. So when you think about the amount of resources that the private sector over the last 7 years has provided to the Hyperledger Foundation across all our projects, from Hyperledger Fabric to Hyperledger Besu, both who are very well adopted in these CBDC pilots and production implementations as well that we see. It is because it's open source, but more importantly, and today, obviously a lot of banks and a lot of engineers in the industry, we need the voices of the users in the story as well. It's great to have partners like Red Date and GFT, but my big call is, and we hear it, we heard it all week, down and up and down,
Absolutely.
right? The engineers in financial services want to build code. They want to build it open and transparently. Hyperledger Besu is one of those tool bases that I think has really met the need of the market.
And even expressed by our friends at MIT Labs about design thinking and the importance of the contribution and participation in that space. I mean, that's what we heard at Congress. Even within the central banks that were engaging in CBDCs, one of the things that they needed to think about was, how do we at some point coordinate that design thinking and make it more aligned? And that interoperability is a huge issue. So I want to ask our panelist friends online. Tim, you shared, and Florian, you shared that it is now live. It has been live in the sandbox in July with a limited test partners here, and now it is live for all the world to see and to participate. So I do know that a lot of financial leaders are here in Davos, who are listening in from the conversation from around the globe. So for those just learning about it right now, I want to ask the panelists, how are you engaging with UDPN? And if you could share some use cases and some anecdotes, even some learnings that can help illuminate what a proof of concept project might look like from your perspective and from the industry perspective. So Stephen, I'm going to start with you from BEA.
Well, I think we are actively participating in many POC. across different organizations, as we are very interested in learning more about the decentralized system. So as I mentioned, I will work on the use case number 2, the travel rule. I think we look forward to more opportunities for the in-depth collaboration with other organizations to better understand. But again, what we are looking for is very much on the technology itself, on how we leverage the technology and also the capabilities to help transform our business model. So we talk about lots of sexy words like operational efficiencies, whatever, automations, but how do we code in terms of programmer within the bank and also our partners is one big question that I'm always thinking of, especially nowadays. They're always challenged around the world, not only Hong Kong, the talent shortage. So how we build up such capability within the bank, and also how we educate and also communicate with our business users on what is CBDC, what is blockchain, and what's smart contract, right? So many sexy words over there, and how we break through that is one key question for me as well. Yeah.
I think it is a question that, and an issue that everyone shares. It is about that talent pool. It's there, and how do you onboard into this new technology? Vincent, I want to ask you, from your perspective at HSBC, what are the use cases that you're going to be participating in? How are you training your workforce, and certainly tapping into the incredible talent that is Hong Kong and the educated young people who are extremely interested in the space? What are the use cases that you see, and other business use cases that you see with this technology?
Yeah, definitely. We are quite proud to be assessing or participating into the sandbox, given this is a Hong Kong-led, partially a Hong Kong-led initiative. And I'm originally also from Hong Kong, so I'm quite proud to be part of it. In terms of use cases, one of the key objectives we are trying to assess is how different coins or different tokens can work together, including CBDC and including potentially a bank issued or privately issued coin. So because, as I mentioned earlier, a lot of the central bankers that I've been speaking to, both in Asia or in Europe and also in the Americas, are leaning towards looking at privately issued tokens in place of a direct model where the central bank themselves is issuing the tokens. So having more coins on the market, more regulated coins on the market, definitely needs some better coordination, better ways of interoperability, and we look forward to trying out on the UDPN sandbox to see how it may help achieve that agenda.
Andreas Herzog.
Thank you so much, Vincent. Stefan, since I thought that was
Schönen
German,
guten Tag.
I will share this question with you, Stefan, over at Deutsche Bank. When you think about
Das stimmt, das ist schon ein bisschen.
When you think about how the use case of UDPN is going to play out, and as you utilize that and figure out the proof of concept in the sandbox, what initiatives are you going to be working on over at Deutsche Bank?
I'm sorry, I cannot comment directly on that one. I keep it more general. I think if you look across all those 10 use cases, you have a pretty good coverage of all the issues and topics you could come across once you build up or want to integrate a token-based payment system or several token-based payment systems. And I think the advantage of those, you have them in one box, in one sandbox, so you really can compare and maybe compose use cases on top of each other. And once you have that, you can also, as Florian alluded earlier, to move to more complex and from a traditional point of view, esoteric use cases. Like, for example, you could include DeFi stuff in that sandbox or so on, and then build on top. And I think the good thing is you have everything, I hope, in one box. As Tim said before, everybody can access what's being built. And then maybe you get some more complex setups rolling where you can investigate deeper and deeper into the matter.
Thank you, Stefan. And Torsten, this is obviously the use cases. I'm very curious about how you are going to engage with your proof of concept use case and how you'll apply it, but also the business thinking and any other business scenarios that you're thinking for this UDPN technology.
Right. So quite so. And I think what we've already come to accept is that the initial adoption of stablecoins and CBDCs will be quite use case focused, right? That we be looking at motivations that look to address specific domain problems. Perhaps these might be more niche, and then justified through some sort of revenue opportunity or profit drivers. This speaks a bit to our tagline of building out disruptive business models. I mean, in terms of the list of the POC use cases, definitely looking at digital currency transfers and swaps. The purchasing of digital currencies, of course, because as a bank, there might be a role to play in being a dealer for the CBDCs or themselves stable coins, as opposed to leaving that to the open crypto market. A lot of applications in the e-commerce space, simply because the inefficiencies of moving these monies from fiat-based bank accounts and databases directly onto on-chain ledgers. But I think what gets us excited is also the opportunity to experiment with the smart contracts, right? So really allowing participants here amongst this group to publish these payment-related smart contracts and do that in a structured and coordinated manner. And so the learnings there are really, how do we do that? How do we coordinate these, initiatives, and then validate, the experiences of, transactions on chain and on mainnet. And I think this is central to our intent to validate the use cases and also to derive the strategic benefits that will bring back to the bank and to the ventures.
It really truly is venture thinking. And as I've said, I think time and time again, every company that exists today is a startup. We are engaging in emerging technology in a new way. How do we engage with this paradigm shift is really integral here. To the architects of UDPN, GFT and Red Date, how are you going to support the POC use case development? And can other parties access and experience these use cases in the sandbox in the future? And finally, what are the plans after the 10? Can there be more? So I'll let you share for the audience joining from around the world. Very curious about this project.
So maybe I'll start. David, you can pick up. So what we plan to do is we have a dedicated set of resources in GFT that will help manage these POCs. And so we're inviting, obviously financial institutions like we have represented here, but also governments and technology companies to be a part of these POCs. And so we have a pretty structured process for managing them over the next 6 months. And through the course of those POCs, we expect that we and the other participants are going to learn a lot about issues, about costs, about things that we didn't anticipate. And we intend then at the end of that POC to publish a report. And we'll actually issue it publicly to share with the industry and share with the world, what are the learnings we got? What are the issues we ran into? And then that POC itself will live in the sandbox. So as Stefan referenced there, people will be able to come in and learn more and understand how it works and actually see the real technology. Not just a theoretical white paper, but actually see how the technology works. So we actually have a very structured approach to those POCs. So what comes after? Those are the first 10. We envision probably 20. So those first 10 are in the first 6 months of the year. But some of the ones that we think will come after will involve other types of industries, payment providers, technology companies, because part of the concept of UDPN is it doesn't just connect financial institutions. E-commerce companies could operate a business node in the UDPN. So we think that there will be a lot of use cases that fall even outside of the traditional banking sector. And so those additional 10, I think will start to focus more on industries outside of traditional financial services.
Wow, to start in traditional finance and then to be able to expand that learning, what is the vision that you share and perhaps can add to where do you see UDPN going and how you hope other industries will engage with the technology?
Yeah, sure. So I think one of the things that we want to do is obviously we want to do more POCs, but apart from that, we also want to apply what we're doing into expanded, let's say more scaled use cases as well eventually. I think that will be the logical next step once we get through the 20 initial POCs. I also think that at some point in time, we need to, and probably in the medium term, move on to something which is more CBDC related. I mean, we do have one CBDC POC here, but that will become more and more important as time goes on. And that's something that we have to embrace and we have to drive forward. I think that the other types of companies that we're going to get involved could be very, very broad, to be honest with you. So if you have a business node, then that really is open for use from any kind of IT system. So that could be from a website that just wants to make a single payment to a very large e-commerce company to anything in between, really. So it really is open to a lot of different types of users and a lot of different types of use cases. I don't think that, I think it's quite limitless in terms of the amount of use cases that you can do on top of it. And that's why we have this focus on doing lots of POCs, bringing lots of ideas to the table at this point in time.
It's almost akin to building the roads of finance and financial transactions in the future. And we start with, I guess, the gas stations, because the cars are going to need some fuel to engage with each other around this globally connected world of ours. When it comes to the project, one of the key differentiating factors of UDPN here is, from what I understand, its governance and management are decentralized. But as our friend Pindar Wong in Hong Kong coined, decentralization does not need to mean disorganization. And Daniela, obviously this is really up your alley, as when you think about it from a Hyperledger Foundation perspective, you definitely are an expert on building consortia. Do you think that this decentralized governance would work for something like UDPN?
I think it's what the technology is made for, right? And building these governance models on top of the technology itself is the convening function of an organization like UDPN, right? And I hadn't seen the architecture before. So, for us, it's very exciting to actually see this stuff in the public. And I'm really looking forward for a lot of the use cases to then be reabsorbed into the code base itself as requirements for Hyperledger Besu, in this case, for deployment. So when we see organizations like UDPN or getting together and building these governance models from an architecture perspective, this is what the technology is built for, right? Now, getting the technology and the business governance part right, enabling the efficiency, the transparency of these networks, and then obviously the production implementation of these networks is really up to partners like Red Date and GFT working with the financial services. When we think about how do you do this, doing it in the open. So, Tim talks about how the use cases and the POCs are going to be reported out, then everybody can have input. Even if you're not participating in those use cases, you perhaps have been participating in use cases in other initiatives that might bring back some learnings that could be implemented. So when we think about open source building, open source consortiums, like what we do at the Linux Foundation, how we do it at Hyperledger Foundation, it really is about creating that framework for experimentation and for making changes. How do you make changes to things that work and don't work? We've all been at this for 7, 8 years, many of us. We've seen the learnings and what I call the earnings of failures. And I really think that, with the organizations that you see here today on the panel, with the private and the banking sector, that I think that we are getting to a point where consortium and governance is not a puzzle anymore.
Mm-hmm.
We know the things that work. We know the things that are a little sticky, and we need to experiment and move forward with it. So like I said, what we are very excited about at the Hyperledger Foundation, specifically for the Hyperledger Besu project, is those learnings, and then having those learnings applied to the technology so that the technology continues to expand, to grow, and to adapt to different use cases. I want to come back in 24 months and there's going to be 25, 30 use cases on that slide. You're going to have to put 3 slides.
It really is a digital social contract that we're all engaging in, and really the fabric of participation. And Torsten, I want to bring you in here because I know that at Standard Chartered, UDPN, obviously values and emphasizes an open, decentralized approach. So a bank like Standard Chartered advanced into the digital assets and tokenization space. What benefits do you see of UDPN addressing use cases from your vantage point?
Right. Primarily, I think we can accept that today there's a number of stable coins already in circulation. The OCC in the US has supported that and is looking at legislation. Other developed markets are also looking at how they can bring more clarity to that. At the same time, what we appreciate about UDPN is that they recognize that many CBDCs are still to launch in the near future. And so today we're seeing early traction, but as that landscape evolves, there'll be a new complexity, there'll be different players. And key is also to understand how to achieve interoperability across these networks. I think for us, and specifically the interest is also to see how it extends beyond the bank into the adjacent industry players. I think that was mentioned earlier in the later stage use cases and POCs, where we think this will reach into the broader fintech ecosystem and allow for transactions and transfers, not only between the banks themselves in some kind of closed loop network, but go beyond that. I really think that that drives home where we think the immediate opportunity will be and the learnings will be, and that's what we'd like to get out of this participation.
And also there's some friendly competition when it comes to geographies. Hong Kong and Singapore are at the forefront of CBDC research. HKMA, Hong Kong Monetary Authority, and MAS, Monetary Authority of Singapore, have issued multiple papers on this. So I'm going to pitch Vincent against Thorsten here, and let's see if we're going to get some battle going. But Vincent, I'm going to start with you first. You're from HSBC Hong Kong, and of course, Thorsten, you're based in Singapore, Standard Chartered. Why do currencies, and how do you capitalize on this as commercial banks? We see Hong Kong and Singapore competing with each other to become the capital of digital assets. Certainly that's something that we cover all the time at Forecast. But who do you think will move faster on CBDCs? Vincent, I'm going to let Hong Kong answer first.
Well, my bank has the name Hong Kong and on it, my remit for CBDC is actually global. So I do work closely with the MAS folks as well on Project Open, Project Dunbar, and other projects that are not CBDC in nature as well. So I'm not really partial to Hong Kong in that sense. The way I see this is a very healthy type of competition actually between the central banks, not limited to Hong Kong and Singapore, but also with RBA in Australia, with BOE in England, and Federal Reserve in New York that I'm working with. The way I'm seeing is that they are trying to solve different issues and trying to hands of different use case and trying to advance the agenda slightly differently. And BIS is actually playing a key role in coordinating between a lot of the central banks. So BIS Hong Kong Innovation Hub, BIS Singapore Innovation Hub, they are actively trying to leverage the resource that is available in different jurisdictions and the banking resource that they mandate us to volunteer into trying to solve different parts of the equation. So some part of it is trying to solve a multi-CBDC platform. So Project Ambridge do that. And so Project Dunbar doesn't really go into a technical implementation stage with this type of things, whereby for Bank of England, they are trying to look at regulatory framework more so than anything. Bank of Thailand look at legal framework. So I see a lot of formal and informal coordination between central banks trying to solve this all together. And in a very interesting way, they are trying to build upon each other's results as well. So whenever Hong Kong release some reports, you can see it make reference to earlier projects that have been done in other locations, and similarly for MAS, they're also leveraging partnerships or initiatives that other locations had done. Going back to your questions, who is going to do this first, right? So the way I'm seeing, both jurisdictions are advancing quite fast, and there's a lot of successful use case also, as Thorsten mentioned, on the digital asset issuance and DVP settlement on both jurisdictions is actually quite successful already, and it's actually a booming market in the asset classes that are made available in a tokenized form both for institutional customers as well as for professional individual customers. And that also coincides with a lot of the ESG requirements that are, or the ESG related products, green bonds, etc., that are being introduced in a lot of this market. The way we are seeing this at HSBC is that the pie is so big that we really need more people to be working collaboratively together and to make this work for everyone, including individuals, investors, including the security services providers, including the cash settlement utilities providers, including the clearing houses, including central bankers themselves. So the sooner more people get on the same agenda and provide interoperability between each other and possibly by UDPN, the better.
Spoken with true diplomacy and interoperability, and in the spirit of really the theme at WEF this year, collaborating in a fragmented world. It's not that fragmented. Thorsten, it sounds like there's a lot of friendly competition, but more co-opetition than competition. And so how do you view the friendly competition and how you're both moving forward, potentially separately and together?
Yeah, I'll take that cue from Vincent and quite agree that it's very more collaborative in both the journey and the learnings. I mean, well, first of all, we need to accept that CBDCs would, after all, be a national infrastructure, right? And that's a public good that needs to be designed and thoughtfully built out, and it must bring benefit to all parties. I mean, the central banks put a lot of effort into understanding the nuance of the different CBDC operating models. And so key challenge is really, how do we mirror what is today an existing wholesale banking model with banks settling through their reserves and simultaneously potentially handle a retail payments flow? Right. So of course, banks continue to play a key role in that, and we'll have to figure out if we're intermediaries, how do we handle KYC, because that can be quite easily and legally delegated. But then there's also the on-ramps and off-ramps, which themselves require a lot of technology infrastructure. So this is the learning. There's also going to kind of say there's probably less about competition or any jurisdiction moving forward, but also identifying valid and justifiable use cases. I think Vincent mentioned, international transfers and currency swaps. Singapore, by example, already has many modern payment options available to its residents. And so with these payment systems already being very pervasive and widely adopted, it's a bit of a question as to what will then really extend, or what the real benefits will be by jumping deeply into the CBDC kind of opportunity. But the MAS itself, through Project ORCID, has confirmed that there's ongoing learnings and ways to advance the financial infrastructure of Singapore, and us being based here are following that very closely too. Project ORCID is also interesting because there's other novel approaches being evaluated, like purpose-bound money, right? And this is really to see how do we perhaps take a government voucher program and enable that through smart contracts. And so by programming the money use into the protocol, specifying conditions as to how it can be used and where it can be used. So really just to close out on that point, that a lot has been learned already and validated. And similarly from our side, following these initiatives and collaborating across the region and with the central banks on various projects.
Well, I think the world is definitely paying attention, the concerted international efforts, but certainly Asia having a lot more lead time when it comes to CBDC thinking. And Daniela, you and I were nodding our heads when it comes to those payments, those digital payments, which would, during the COVID years, would have created a lot faster, efficient transfer of value to people who need it most, rather than being stuck in the archaic infrastructure that certainly restricted it. Stefan, as head of digital asset, and Stephen, as head of IT, what are some of the hardest issues you're facing when it comes to working with new digital currencies as a traditional commercial bank? Stefan, I'll start with you.
Well, I think, might be repeating myself, one of the hardest issues is the uncertainty. When you look from a purely tech point of view, if you have a traditional system, you know what to expect. The digital currencies, everything is open, the open playing field. So you have to basically design for the future and take into account all, or not all, but as many as you wish or can imagine possibilities going forward. So you have to be really flexible, adaptive, and you have to take, to Daniela's point, take into account the open source developments. Also, if you look into the cryptocurrency, Bezo is more or less a derivative of Ethereum. And if you see how the speed of innovation is there, you just have to keep on the ball to see what's coming down your road, down your alley, and what's possible going forward to satisfy your customers' needs.
Thank you. Stephen.
Well, I think always working with a new technology naturally bring challenges, but we will focus on the constructive side and continuously looking at the breakthroughs. And we also really keen to extend the use of digital currency to explore other use cases within the UDPN environment. But I would say timing is very important. Just like, for example, in Hong Kong, the regulator, Hong Kong MA, is really supportive on fintech. And as you also aware, they recently announced a three-pronged approach for the e-Hong Kong, the implementation and a licensing regime for virtual asset service providers. And while the government is currently focusing on the technology development and enhancing the regulatory landscape, so we are exploring different use cases along with that. And we greatly appreciate also the sandbox developed by the Hong Kong MA, as it enables all the banks in Hong Kong to test our bold and creative ideas, where we are pleased to take part in the open forum they organize in the industry players to exchange ideas. So I think with the regulator's strong support, I think we look forward to work together and make breakthroughs in the industry. And also as a commercial bank like BA, so we would take a proactive approach to our fintech strategy. So the bank has a strong client base, and our customers are always looking for more new technologies and payment means to manage their wealth. So I think we hope to leverage all these kind of opportunities and also demands to provide them with better digital service with this technology.
And I wonder, when it comes to opportunities, and this is a question for our online panelists of bankers, does it include asset-backed stablecoins? Have your banks thought about issuing your own stablecoin within the regulatory-backed, policy-reinforced guidelines of issuance of stablecoins? Have you thought about that? Stephen?
Yeah. We are very open to this idea of a stablecoin. Just like a recent conversation with Hong Kong MA, so they are also very supportive on any commercial banks in Hong Kong issuing the stablecoins along with the ERLD. So I think because it's really flexible and also customizable and also programmable. And I think the banks participating with the Hong Kong MA survey on stablecoin last year, I heard that all the banks will really eager to go on with the stablecoin means on along the e-Hong Kong, the CBDC development, and also actively exchanging idea with Hong Kong MA. I think it's really good news that Hong Kong MA is really open for the banks to to perform the stickiness layer with the customers while they are focusing on building the central bank digital currency, the issuance part, on how to enable the wider landscape, especially how to work really closely with the ECNY as well. I think it's really a great opportunity, I would say. Yeah.
Mm-hmm. Vincent, how about you at HSBC? Are we going to see a HSBC stablecoin?
We are very supportive of, again, all regulated forms of virtual assets or digital assets or tokenized assets, coins being one of that. But I have to be careful to say that we want whatever coin that we issue or our peers issue to be, again, interoperable. So we don't really see a stable coin or a reserve-backed type of commercial money as a form of asset class for investment purpose. So it really would serve the purpose of more of a value transfer or a settlement utility. So for a settlement utility to work, there has to be some common standard and common framework to it. So we have to have some sort of a alignment, both from a single jurisdiction perspective between the banks and ideally across jurisdictions globally to converge onto something that we can work with, so that we don't end up with digital islands with a few coins working together and another few coins working together, because that's not going to help our customers ultimately. So we are very supportive, but we are helping the regulators, HKMA included, MS included, Bank of England included, New York Fed included, to look at how we can drive forward to that sort of utopia where the coins can really interoperate, and UDPN represent another attempt that we can really assess to see how an open type of decentralized type of environment may be a solution to that problem. But it's still quite early to before we can reach that utopia. But definitely we are very keen to drive at that outcome at HSBC.
Stefan, we're already seeing euro stable coins and the exploration of that across EU. At Deutsche Bank, what do you think of this emergence of stable coins, and is it part of general thinking and consideration?
Yeah, I think stable coins personally have to be part of any consideration going forward. Especially maybe here Europe has taken a step which hasn't been taken in Asia yet. In the upcoming regulation, MiCA, the market regulation for the crypto markets, basically, there is a section on stable coins and how to basically regularly safe develop stable coins, back stable coins. And one of them is even called e-money token, once it's backed by a single fiat currency. So we're getting here some regulatory certainty. And by that, I would expect that there will be some movement into that direction in the future. So they're certainly there, and in case this regulation gets passed in the EU Parliament, it's then basically being embedded in the law, and people can regularly build stable coins according to that recipe, basically.
Torsten, SC Ventures, are we going to see some engagement, some projects coming from the stablecoin arena?
I mean, maybe more holistically said, there's markets move at different speeds, right? And with the footprint like Standard Chartered into 59 countries, there's a lot of coverage of also very much emerging markets. What we might see is that some of these could leapfrog directly to CBDCs, but while some of the more mature jurisdictions take longer to overhaul their infrastructure, there's room for the adoption of stable coins. And I think the likes of Circle with USDC and EuroC are making great inroads, and also recently secured licenses in Singapore to operate within this region. So from SC Ventures' point of view, CBDCs and stablecoins will certainly coexist, and they will complement each other also by the interoperability. That means by bridges or by token exchanges. And I guess anybody who's read Liquort's book, Lord of Finance, will come to appreciate the last century's challenges with bank-owned issued monies and notes. And clearly there's a need for regulatory oversight. And so I think that dovetails into the MAS's initiatives in that space, where last October, a consultation paper on stablecoins was put out, proposing guidelines on how to regulate and how to legally, let's say, endorse stablecoins and officially approve them and officially label them for broader use and adoption. And of course, such stablecoins would have to be then backed by the Singapore dollar. So we believe this consultation does open the doors for financial institutions and the private sector to issue own stablecoins, but also brings a lot of legal and regulatory certainty, and that is most definitely important.
Yeah, absolutely right. Last question. This has been a very deep discussion, so I want to thank our online panelists for really sharing so candidly. And the last question goes to our panelists here at live in Davos right now. As we sit surrounded by leaders in finance and other industries, how do you see the distributed ledger, the DLT technology, Daniela, as use cases not only for the finance industry, but also across enterprise? And I'll let Daniela answer first.
Yeah, well, I think, production and use cases and real value moving through these networks, we're seeing that it's no longer a question of whether it is the right business model, whether the technology can scale, whether engineers and business people understand the technology. So I think we're there. I do want to make a comment as the only American on this panel about the fact that, well, Tim, but you reside in Hong Kong, correct? The only American resident, that there also is amazing work going on in the United States around this topic. So the Hyperledger Foundation has partnered with the Digital Dollar Project, along with Finos, which is the FinTech Open Source Foundation at the Linux Foundation, addressing FinTech open source solutions, in bringing these type of technologies and discussions together. Last May here at Davos, we announced the Open Digital Currency Initiative, where it is about bringing code, right? Where a lot of these use cases are creating the use cases, they're creating the POCs, but there's going to be common code that deal with questions of interoperability, that deal with questions of how these get, from a regulatory perspective worldwide. So I think, those things and the learnings that other industries, let's say in the healthcare pharmaceutical industry, in the supply chain trade finance industry, those type of use cases and the learnings around using distributed ledger for those use cases, I think will come into this as well. And I'm so excited, like in 2023 and in 2024, we're going to have the opportunity to actually bring these learnings together around the technology, around the regulatory requirements that many of these regulated industries have, and how the technology in the open source communities can build these new systems out.
David, Tim, beyond finance, UDPN?
So I think so we've been working on this since 2014 in the DLT space and the blockchain space in general. And I would say that at that point in time, enterprises were dabbling. They were trying things out. They were looking at what they could do, how they could apply themselves in POCs. But what we're seeing more and more is that actually people want to apply what they're doing to production. And this is what we're trying to do with the UDPN as well. We're not just doing this to experiment. We're doing this to actually do something which is meaningful for all of the participants. And that's for the banks that are involved at this point in time, and also for the enterprises in the future. And I think that on one side, during all of these POCs and the production projects that we've done, we've always had this cash on chain element, which we've kind of done on a project per project basis. And that's always been kind of, sewn together. And CBDCs in general, and obviously digital currencies, including stable coins, will provide a more easy on-ramp to that. But the UDPN in general is just going to make that so much easier for any kind of enterprise that wants to be able to start their own digital asset project, basically, and get access to all of these digital currencies in the future.
So, Tim, if I'm going to drive on this road called UDPN, where will it lead me? Where will it lead the end users? Where will it lead institutions and enterprise?
So I think, so first of all, I agree with what Daniela and David said around the use of DLT technologies in the broader enterprise. To your question, Angie, I think that, actually, I'll go back to what Florian said earlier, which is I think that where UDPN will lead, and it's going to be a journey through these POCs and learning and what works and what doesn't work, and getting input from different regions and different types of companies with different points of view. And I think where it's going to lead is more financial inclusion, faster payments, lower cost payments, more innovative business models and services on top of that. But that's not a 3-month or a 6-month journey. I think that's a multi-year journey.
Which makes sitting here and reporting on this space and thinking about the industry and thinking about data and thinking about all of these things that are going to be the future rails of our future digital economy very exciting. And I hope that you're all seeing that too. Thank you to our panelists, both online and IRL. And I will hand it over to Chris Ortiz, board member at GFT, for final remarks. Thank you, everyone.
Thank you.
Thank you all.
Wow, it's been a great almost 2 hours, and I won't keep you too long. Thank you. First of all, I want to say thank you to our panelists and the participation and everyone who's joined us today online. It's been an amazing day, and really appreciate the chance to launch this today in front of you. Also want to thank our Angie providing the moderation for this, and she'll wrap us up in a second. And of course, the people who contributed to making this work today. It wasn't an easy task. We brought everyone together, but to do it on such an amazing stage, we really appreciate everyone's contribution in making this happen. Today's a significant milestone It's a significant milestone, as we've been discussing today, which is effectively an evolution of the digital currency industry. And I can't, I'm going to rehash some of the points that Angie said. We're in Davos. It's the best stage to be on. And the opportunity to follow in the footsteps and continue the theme of 2023 and for the World Economic Forum of cooperation in a fragmented world. It couldn't be a better better situation where we can actually present UDPN today. Right? Ultimately, we talked about collaboration, and actually, I think we saw from the panelists, healthy competition, I think, is going to come out for international payments. And this is going to come through a decentralized infrastructure. So UDPN will foster effectively the collaboration because it'll be a transparent and secure platform, and it will be there just clearly for cross-border payments, right? So we're really excited about this, and it's been in the making for the last couple of years, so we're really happy to be here today. Because of the nature of the decentralized infrastructure, we also will see that there'll be a reduced risk of a single point of failure, but it's also an opportunity for businesses to actually be innovative and build their own smart contract applications, which is really exciting to be doing on the UDPN infrastructure, and people can share that, as we said. So I'm just going to leave you with 3 points because we are kind of running out of time today. The first, foremost, UDPN is not a company or a centralized entity. I want to be very clear about that. It's an alliance with the financial institutions and with the tech companies, and really happy to be part of that as GFT and Tim with Red Date. We've really been committed to this because we really believe in the decentralization, and that's at its core. The second point I'd like to bring out is that it's here, ready, and now. We have the sandbox. Use it, take advantage of it, participate. We have 10 use cases. We have some solutions already defined. We're already seeing, well, there's potential to be much more. So the faster you contribute, the more we can accelerate on those use cases and learn together. Right? So let's make sure it's not just, it's adding and complementing to our existing financial infrastructure. So this is a great opportunity for everyone to contribute to that. And finally, it is an enabler of innovation, right? Again, it's about the evolution of digital currencies in the market. We hope that this will get adopted fast and sooner. And we see, again, we hope to have the 10 use cases in the next 6 months and hopefully even double that this year. Let's see how we progress. But again, the excitement is about the future and where we can go into different industries and where we see a lot of different actors playing in this space, ultimately to build a better financial future. So we're going to see ultimately the power of decentralization, providing inclusiveness, transparency, and ultimately a secure economy for everyone. With that, I just want to say thank you again for joining us, and I'm going to leave it to Angie to do the final closing remarks.
Well, you heard it there. And Chris, thank you for your remarks. Thank you for everyone showing up here IRL in Davos, and for our panelists joining online. And there's food there, there's drinks there, grab a bottle. You're going to be networking a lot. You're going to be sharing ideas a lot. And we hope that today's conversation really influences the thinking and inspires the collaboration that you're seeing with UDPN, and certainly on the sidewalks of the promenade as we rub shoulders with some of the top leaders in industry in the world. And I hope that you will bring what you learned here today to the streets of Davos and beyond. Safe travels. Thank you for joining us. And until next year.